shit. She does. Artificial intelligence.
like NVIDIA and Microsoft in order to take advantage of the AI trend, I think there's still going to be a lot of demand for stocks going forward. But I think it's prudent to also balance that on the other side. Look at other sectors that maybe don't sound as exciting. But for example, REITs. For 2 years, they tend to outperform in periods of great positive.
This shit should do $1 billion.
At a discount to NAV. Look outside of the markets are starting to perk up in certain areas. Like you look at those like India now that the elections are moving behind them. But these other areas where you can find valuation support in order to offset some of the premium that you're paying in tech.
Sarah, how much is the overall market and market sentiment dependent on NVIDIA now, given what we just heard from Kate Rooney about the leverage that many investors are placing on that? It's a very large stock in the market. It's heavily represented in the S&P 500, and it reports before the bulk of tech. I believe August is when we'll expect new numbers from NVIDIA.
Well, NVIDIA is definitely becoming the tail of black.
And I think we really like it,
It's actually trading at a discount. It's not a stock that people, given the earnings growth that they've had, it's just not a stock that you're paying a lot for. That's why there could be a lot more upside given also the limited supply of AI stocks. But let's look at there's another side of tech where there's some value. Software is eating up so much year to date. Tech's up, almost 50. Semi-tech's up like 50% year to date. Software basically flat. This is areas where we can find companies that have good fundamentals, like Snowflake, which is a decent AI play. I think software is a place where we can pick through the carnage and find some good stocks.
That's really interesting because that was one of the unexpected losers initially from the rollout of this software. Maybe you and John know more about this than I do. Can explain, is it warranted or not? If you start to integrate AI tools into an enterprise product, it makes people feel more secure about using it at work. It sounds like a boon. If not, maybe it cannibalizes.
Well, there's these derivative AI plays like Snowflake, which is cleaning up the data that we need to use, and therefore within the AI industry, and also their fundamentals were still pretty strong for the first quarter. Some of the best revenue growth we've seen from them in quite a while. So I think there's these other companies that people are ignoring and overlooking because everybody wants to be an NVIDIA, and it is a big benchmark name. For portfolio managers that we're not invested in,
we want money, bro.
Also, we got this unusual bifurcation, I think, in software where small caps are really suffering. Usually, when you see one of these big new generational shifts in software, it's the newer disruptive companies that are getting the benefit from that. But in this case, we see the hyperscalers and semiconductor names getting the benefit, and some of the smaller caps are suffering because of what's been happening with the Fed. What turns that around potentially? Does it have to do with the macro data that we get? I'm talking software overall, the smaller cap names in particular, or is it evidence that there are winners emerging in this AI race of the smaller cap?
The artificial intelligence.
Two things to consider with what's going on with the small cap. First of all, this tech cycle is different in the sense that the large companies spent tens of billions of dollars investing in artificial intelligence. They got such a head start that they are the clear winners. That's different than the late 90s where there were these small companies popping up left and right. We all remember iPad.com, which were trying to get into the internet and then eventually failed. The small caps, look at when they tend to outperform in a cycle, it's when you're coming out of a recession. We can talk a little bit about how we are seeing early signs of a recession coming, but it's not clear yet. So when I want to own small caps, it's a little bit before I see the bottom of a recession, and we're just not there yet. We're maybe just seeing early signs of a recession coming.
All right, Sarah, we appreciate it today. Thanks for your time.
Thank you for your time.
Well, so far in June, technology has been the best performing S&P 500 sector, up 11%, while utilities is the worst group, down 4%. But with a lot of the country experiencing a heat wave, could utility stocks heat up as well? Even right here to tell us.
Hey, John. Well, more than 100 million Americans are facing extreme heat, and when consumers turn up their ACs, that can be good for utilities since they sell more power, and that translates to higher revenue and earnings, although there are some caveats based on which state a utility is in. But one group that could really do well here is the independent power producers, or IPPs, like Vistra, Constellation, NRG, and Talent, which operate in restructured markets. Basically, they only own generation assets and sell into competitive markets, and so when demand rises and power prices are higher, they make money. And while extreme heat might not have an immediate impact on regulated utilities, longer term, it's yet another strain on the grid, which helps utilities case when asking regulators to approve higher rates to pay for more capital investment. And with AI driving power demand, Bobby Adameka, who manages PGIM Geneson's utility fund, told me that in the 25 since he's covered the space, the fundamentals behind the sector have never been more positive. For a long time, it was just seen as a bond proxy, but things are getting a little more interesting here.
What about blackouts and old grids? I mean, you've got the supply of power to satisfy demand. I guess that's good, but what if that breaks down?
Yeah, so far we haven't seen any cases of rolling brownouts or entire blackouts just yet, but a lot of that is because utilities are now focusing on demand response programs. So I'm in New York, I have Con Ed, and they texted me on Tuesday saying, please don't use your heavy load between 2 and 10 p.m. So they are trying to shift some of those heavy energy users like your washing machine, your dishwasher, things like that. And so that's been a big initiative to get consumers in front of it. And in some markets, they'll actually reward you.
Yona ikreni but the only problem about the i-app yakhona idonsela fela. I don't know why. Like i-camera yakhona, there are something like eseduze ngathi kude.
People are tying together the rise in heat right now with the rise in utility bill. But if I'm correct, the utility bill increases we're seeing are from the Russia-Ukraine war a couple of years ago. Is that right? I mean, can we look forward actually to some relief? Because now gas prices and all of this have been pretty contained.
I don't think relief. I mean, we are still working through some of those higher prices.
Yes.
You have to remember that more than half of the bill is on the operating side, so things like to run the wires. And actually, last year we saw about 18 million worth of higher rate increase requests from utilities. That was the third straight year of a record. And so with all the stresses on the grid, I don't think we're going to see lower bills anytime soon, because it is that other portion they have to invest in. They have a lot of capex and that's what earn that rate of return on.
Dishwasher and car. You gotta charge your car.
That's a big one.
Different things. Coming up, sales of fuel electric vehicles more slowly, but sales of food are charging up.
With over 8 million broadcasts and over 600 million viewers engaged monthly, Restream is the #1 tool to increase your live audience organically. Restream enables you to create, analyze, and share your high-quality streams to over 30 different social networks at once.
TotalEnergies makes the energy transition. With our collective human and technological skills, we are building a multi-energy company. We are improving the production techniques of today's energy and developing renewables worldwide to answer the challenges of climate and the growing energy demand. More than ever, we will continue to move towards energy that is cleaner, more reliable, and accessible to as many people as possible.
Like, I don't understand why, and if there's a fuck.
aspects of industry to be successful. Meanwhile, while U.S. electric vehicle sales are cooling, it's a different story for used. That's what Carvana CEO Ernie Garcia told us. Joined us earlier this month. EVs make up a meaningful portion of our sales. We sell disproportionately high levels. So we sell to the entire mix of customers, whether it's age or income or any kind of demographic that you look at. So we do skew a little bit younger, a little more affluent. Among the reasons why sales are soaring, falling prices that are now almost on par with gas-powered cars. According to Cox Automotive, an average used EV sells now for $36,000, while a regular used car costs around $32,000. Joining us now to dig deeper into this trend is Aaron Keating, executive analyst at Cox Automotive. Aaron, Tesla cut prices several quarters ago, and you see all these pictures of lots full of undriven, unused Teslas. Which is the chicken and which is the egg here? The fact that people can get used cars for less, so they're not buying new cars, so they're filling up lots, so they're cheaper, and how do you think of that?
I think it's a mixed story, actually. We have to remember that just in 2021, we had less than 500,000 EVs sold in the first place. So we do have more used EVs now entering into the market. And of course, back then it was Chevy and Tesla that were both sort of dominating the market. And so we're seeing mostly Teslas because that's what's available in the supply for used EVs. So I think that it's becoming a more affordable option for consumers. There's up to $4,000 that they can get in a tax credit right now. And that's also helping them pull down the initial outlay of costs they have on a used EV. So it's a mixed story, it's a mixed bag, but we do definitely see that the cost parity is really driving a lot more sales of a used car.
And how does the lease market fall into this? I think I saw something about a lease deal on Hyundai's Ioniq 6, where you could get it for less than $300 a month and less than $3,000 down. Like, I don't even know why I'd buy a used EV if I could lease one for that price.
So I mean, that's also a tale of two stories, right? One, it's helpful because it's good for consumers. It's driving down the price of the used EVs. Because to your point, if you can compete in a new lease vehicle, the other good news about that, though, is that now we know that we will have a better supply of used EVs coming into the market in 2 or 3 years as well. So it works both ways. It's good that the consumers have good, affordable options from a leasing perspective, which then, of course, puts some downward pressure on the used price. But it also allows us to see in the future that we will have a steady supply starting to come into the market of used EVs, making that transition just a little bit easier.
I wonder if they're about to inflect lower, because I like this comparison. Currently a traditional car, $32,000, a used EV, $34,000. And EVs might keep dropping in price, because one of the interesting data points I saw lately, Aaron, was that a lot of people who have bought one have buyer's remorse.
Sure. Okay. Some people are thinking the infrastructure hasn't caught up with us yet. charging is a little bit more difficult than it was before, anxiety range, things like, but this transition is going to take us some time. The industry needs time for consumers to catch up with the supply. They need to be understanding where the infrastructure is. They need to be knowing that they can go down the street and charge, or that they can charge at home and have a good amount of range. And we were seeing at Manheim a lot of these vehicles that are coming in and they're going through our industry first VIN specific battery health score. And the great news is we're not seeing a ton of degradation on those batteries. So it's a really good news for the consumers to know that, hey, you can trust the batteries that are coming in these cars. For the most part, they're holding up really, really
Now
well.
my EV.
Warranties are still really good.
So
There might be some buyers or more individuals who have had EVs before. I think that as things continue to pick up, the awareness and so forth, we're going to continue to increase adoption.
And what about, Aaron, the math for the buyer on buy versus lease, versus buy new or buy used? It seems like it might be different for EV, because the conventional wisdom has been, hey, you buy a car, you keep it for like 10 years, and then it's a better value than leasing. But the technology is such a key part of an EV. Is it different? Are you just going to get less on trade-in or resale value in the future because the technology will have advanced and the demand won't be high for that vehicle you've got?
Sure, and that's something to consider, because when we think about getting a used, call it a BMW or a Mercedes or a Honda, we're thinking 3 years generation, it changes, doesn't really change dramatically the car that you're buying. And in an EV, there is this pent-up fear of, hey, if I'm buying a car that's 3 years old, am I missing out on the newest battery technology and so on and so forth? A lot of the cost savings and development that are happening in EVs is honestly more about mass, shape, size, gigacasting, of course, you hear from Tesla. So making the car more aerodynamic, go longer range and so forth. But I don't think that the technology is going to change so much that you won't have people comfortable with the first and second generation of the EVs that are coming out now.
All right. Well, either way, different kind of gamble, I guess.
You are,
Used or new or lease. Aaron Keating.
Right. Sure. Of course.
A quick power check as we head to break. On the plus side today is Gilead Sciences. The stock is surging on a phase 3 trial that showed its HIV drug showed 100% efficacy in prevention for women. Shares are up 8%. On the downside today, Trump Media, the shares are down as much as 15% on news the SEC approved its request offer for additional shares, which would dilute current shareholders but provide the company with more funding. DJT is down almost 14%. Ahead, we'll discuss the new Moody's assessment of what happens to the economy, whether Biden or Trump gets elected. But first, a quick break. Stay with us.
The Bond Report is brought to you by PIMCO. The Bond Report is brought to you by PIMCO. Ambitiously.
This is a good global debate.
There is no place in the world where we get the kind of access to so many amazing interviews.
To be able to solve problems at a scale that nobody's ever imagined.
This industry is going through its renaissance.
How big a game changer is this?
Exports from China to the EU, they amount to about 10 billion euros, and that's on a total export volume of 400 billion from China to the EU. So that amounts to about 2.5% of EU's exports that are subjected to these provisional tariffs right now. So I think it's really, really important that we keep things in perspective, but also that we trade it seriously. We don't want it to spiral out of control either.
Welcome back to Power Lunch. Let's get a quick check on the markets, where the Dow's up 1%, helped